The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And the stock of the day, one of the day's best performers, IDP Education, ticking up after favourable commentary from Macquarie. The broker upgrading IDP Education to an outperform, saying uncertainty around education policies have been priced in. Now, this uncertainty, of course, related to the lowering of student visa caps in Australia and Canada, as well as upcoming elections in both countries. We just talked as well about Justin Trudeau resigning. Macquarie has a price target of $16 on the stock, and the broker anticipates adjusted earnings of $92 million in the first half of full year 25. All right, let's hear what our panellists have to say. Mark, what are you thinking about this stock? You got your chart here.
I had this back in, I think, August in the call, and I think it was around the $17 or $18 mark, and don't really like businesses where they can't, they don't have a lot of control over, their customer flow and regulatory changes, but can really affect them. But I think down here is pretty opportunistic, particularly, Macquarie upgrading them from here was, I think getting back to $16 is, that's a nice little, it'd be a nice tidy little profit. But I mean, if you look at that chart, it's from a risk reward standpoint, this company does make money. The worst is probably absolutely priced in, and I think it's not a bad risk reward standpoint for a company that's got a fairly stable and has had a lot of headwinds over the course of the last 2 years. So with the Canadian Prime Minister resigning, they're in the process of halving their international student intake.
Yep.
But I think any chance of that policy being mildly unwound is obviously very optimistic, because halving is a pretty severe cut to your possible intake. So I mean, that just shows how vulnerable a company like this can be to government regulation. So if anything, I think the worst is priced in. If anything sort of favourable, even minutely favourable, comes to pass in terms of regulation here or in Canada, this probably does go back up to $16-17.
So would you hold or buy?
I agree with Macquarie. I think this is not a bad point to be buying risk reward, but you are picking a bottom here, so it's not a. But it really is, forward PE is around 25, which is where it is currently. Fair value, sort of, in the stock's somewhere in the 17s. So I think when Macquarie's $16 price target's not that far away, really. You can get back there pretty quickly. So if it turns around, and obviously it'll be probably fairly dependent, if it gets a decent result over earnings, you could see this thing spike back up. So I'd say it's a bit of a spec buy, and I don't think you'll go too far wrong, because I think it is now sort of at that point of really bottom, basement prices, basically.
Getting it at the bargain basement price.
It's got a dividend yield. It's 9-year dividend payment track record. It's got decent margins, so it's if you can pick something up like this cheap, then it's probably not too bad.
Michael.
Yes, IDP Education is one that we've had a bit of history in. Basically, it was pretty much a star stock on the ASX there for a number of years. It was growing, and compounded growth rates were exceptional, and it got all the way up to about $40. We sold out probably early 2022, not even close to $40, but a lot higher than where it is today. But we have recently looked at it again as a bit of a turnaround story. Obviously, there's been a lot of negativity around the company. Basically, they operate two sections. There's the English language testing systems, and then there's the student placements. The English language testing systems, historically, they had a monopoly in a lot of jurisdictions for that. That was the first part of the business that was under competitive threat, because a lot of countries opened that up to other providers. So if you think about migrants coming from other countries, or students looking to go into universities, English-speaking universities, there's certain English language thresholds that people need to meet, and historically IDP really controlled that English language testing part of the market. That monopoly is now been eradicated, and there's a lot more competition in that space, but the real driver of this business is the student placements. And obviously there have been political pressures around that, Canada, in Australia, but we just feel as though the negativity and the extent of those changes in policies are probably behind us. There's a bit more clarity on the outlook now, And even despite, or all through this period, they've actually been winning more and more market share. So this is a company that has fallen a lot in share price, but its earnings haven't really moved that much at all. In fact, they've continued to grow in recent years. Last year was more of a consolidation year. So the valuations come down significantly, and we quite like it. So we do have a position in our managed fund, and we do hold it for clients as well as a bit of a turnaround story. Our entry price is higher than $13. It's probably $14.50 for a lot of people. So we'd have to call it a buy at this.
Oh wow, my first double buy.
First buy of
you
the year,
both
first
told
stock.
me you're going to be agreeable, so might be an interesting show. All right, buy from both Mark Gardner and Michael Wayne there on IDP Education, and that of course was the stock of the day.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.